unemployment claims coming in from a technical perspective. If we break this out, that's another higher high. This holds, then great. But if it doesn't, then I have to say, hey, you know what? I'm a little early to this idea. Let me step back.
Kind of want the dollar to pull away a little bit first before I look to sell. And that kind of does translate to how I'm looking at Euro USD, for example. So
I'm seeing selling pressure, and then I'm seeing buying pressure as well.
Oil getting a bullish signal. That's actually in some ways potentially a bearish signal for the indices. Tomorrow is a really big day on the stream. We will be doing NFP live here at 8:15 a.m. US Eastern. That will be in about 24 hours, same time as today. I just want to remind you, if you are just tuning in, if this is your first time and this sort of content would be helpful to you on a regular basis, make sure to hit the thumbs up button, but also make sure to subscribe so that you can come back for more content in the future. Currently, we're still getting, let me make sure I get the latest updated algo outputs from the Edge Finder. What we can see here is that Bitcoin still bullish, oil, the Dow, oil popped onto the chart. Let's take a look at oil in a moment. Oil getting a bullish signal. That's actually in some ways potentially a bearish signal for the indices. If you know, you know, but the idea is that if oil catches a run to the upside, here's the thing to be concerned about. That ticks inflation higher, right? If everybody's paying more at the gas pumps, that trickles down into the rest of the economy if it stays high for a prolonged period. If everybody has to pay more at the gas pumps, guess what suffers? Airline tickets, services and manufacturing and all the different shopping outlets might take a hit, right? That's why the oil market dropping by like 20% from its highs has been really good for the stock market rally. If that unwinds itself, it could actually tug the stock market down further, which are already looking pretty rough right now. We talked about that earlier. Gold is getting a neutral, but it's hovering just below and almost near a bullish signal for me. So I'm going to continue to watch gold here. NASDAQ, same thing. It's back down to neutral. This got pumped back down. I imagine what actually changed from yesterday? I imagine some of the trend became less bullish. I would say, take a look at the chart here. It uses daily candles, and the daily chart is starting to really reverse here. However, I just want to say on the indices, I am sounding bearish today, but I am not actually a bear. So let me clarify. I am still very much a NASDAQ and S&P bull, but I've said this before. This is why I'm a trader. This is why I'm not primarily an investor. I would say the closest thing I become to an investor is I'm an active investor and or mostly a trader. What I mean by that is that, I bought the NASDAQ on the breakout of this kind of downward trajectory. I bought it and I'm not the NASDAQ, I'm sorry, the S&P, but the NASDAQ moved with it. I bought that break and I held that thing all the way up to about right here. I got trailed out and took my profits. Now the markets are unwinding. I'm still bullish. However, I think this is why I am a trader. I think that something can get overdone and you can wait for another opportunity to get back into that market. If I'm just an investor, I buy it. If you bought it a couple of years back, this is where you can kind of play devil's advocate with investors. If you had just bought it over here, you are still just barely you're just barely in the red after, years of holding at this point. Well, 2 years of holding almost. Point is, this is why I think you can carve out some more profitability if you are indeed actually a good trader. Anyways, looking for a deeper pullback on the NASDAQ before looking for possible buy opportunities. That goes the same for the Dow and the S&P 500. However, the Dow is outperforming right now, believe it or not. We're seeing the Dow stay strong. What is this? Why? Safety. The Dow has much more safe stocks in it on average than perhaps tech stocks, which can be heavily piled into the NASDAQ. So we're seeing the NASDAQ take a hit. Meanwhile, the Dow is doing okay because the Dow, the US 30, has more big names in it. It's a safer collection of stocks than you would say perhaps NASDAQ, which has more tech-heavy companies, which have higher valuations but higher growth potential in good environments. Breaking news. I'm sorry, I'm not gonna. Well, actually, I think we already had the breaking news, right? Nope. Unemployment claims. We do have something. Thank you for the heads up. Producers are always there for me. Thank you, guys.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Unemployment claims coming in. Let's see if we get anything exciting here to follow what was a hotter than expected. There it is. So better than expected unemployment claims, better than expected estimates for NFP, essentially. And what we see here is that NASDAQ doesn't like that. Dollar index parring some losses here. The dollar index, for those of you who watch it, here's a daily chart view. I did a full breakdown. I'm excited to get this out to you guys. Last night, I did a full deep dive on the dollar index. And if you're somebody who trades current, I mean, I think the dollar, I say this often, the dollar is like the core to my analysis. Even though I don't trade DXY, I do trade currencies, I trade gold, and I trade indices on kind of rotation. And the dollar index is at the center of all of it, in my view. The dollar index popping up here is definitely a little bit of pressure on the stock market world. We see yields popping higher with this dollar rally. However, I'm still a bear, and I'm looking for signs that bearishness is the right place to be right now. I'd like to see this thing kind of fizzle out. We're seeing a little bit of rejection, but we could probably take it down to the 4-hour chart to see what's going on. So again, you've got some levels of resistance. You can see that same level we saw on the daily chart. As long as that kind of holds and we actually start to break down, then that's great. However, it's seeming like it's got a little bit more strength than a lot of people are expecting, including myself. I thought we would have rejected by now. However, here's your 4-hour chart demand. We've found support seemingly, and I will be transparent. If this level breaks, then I have to put a pin in it temporarily on my dollar bearishness from a price action standpoint. Fundamentally, I'm still a bear, but from a technical perspective, if we break this out, that's another higher high, right? Let's call it for what it is. I'm willing enough to call myself out when I'm wrong about something, and I'm a dollar bear. So if this holds, then great. But if it doesn't, then I have to say, hey, you know what? I'm a little early to this idea. Let me step back. Let me take a stop loss if I need to. I don't actually have any trades open right now. I have a couple on the watch list. And heads up, if I do take any trades, you guys will see personally, just to jump in front. I mean, I was pointing this out earlier. Dollar index on the daily still looks weak, but the 4-hour, the lower time frames are looking pretty strong. So I'm wondering if those two forces are going to collide, and I guess who wins in that scenario. But dollar index was super bearish going into the end of the year. Perhaps the new year, we're kicking off with a little bit of an uptrend for the start, but I don't know. What do you think, Miko? I mean, take it away, whatever dollar charts you'd like to look at.
Yeah, I mean, I'll take a look at the DXY since that will kind of encompass dollar the best. But yeah, kind of in the same ballpark as you. On the higher time frames, we have actually been in a more or less of a range really with dollar. We haven't really gone anywhere for most of 2023. Kind of just been up, down, up, down. We had a nice downtrend there. We kind of broke out of that and we came back into another one. So overall price is actually kind of sideways. So I have kind of marked up this level here because this is an area where price keeps rejecting, which kind of makes sense, where we have seen a bit of dollar strength in the past kind of few days or so. So longer term, I am still pretty dollar bear. I do think eventually we'll probably continue the path to the downside. However, it's just a little bit too close to these areas. I kind of want dollar to pull away a little bit first before I look to sell. And that kind of does translate to how I'm looking at Euro USD, for example. So again, we're coming to a big level here. Not looking to buy Euro USD just yet. It would be nice if we come a little bit further down, closer to these areas. I'd actually rather be a bear in this market and look to short. Not really seeing any opportunities for myself just yet, so I'm keeping an eye for it. But I'd rather be looking to short Euro USD. I'd rather be looking to short pound USD, and same with Aussie dollar coming to some big areas, as we can see back in there again. So from a trend perspective, dollar isn't really too clear. So I definitely agree with you, but we've hit some areas where maybe you're seeing some profit taking and price kind of retracing a little bit. So I'm not really looking to trade unless I get a bit more information, but I'll see what we can do at these areas, because there might be some nice shorter term sales for me to take advantage, or maybe some shorter term dollar strength. So that's kind of how I'm looking to tackle dollar at the moment.
Okay, fair enough. And Marco, last time we spoke, we talked a little bit about you were going to look at gold a little bit as a possible candidate for trading. Did you ever get a chance to do that? I know holidays ended up being more crazy busy than I thought they were, but or they would be. But did you get a chance to look at gold at all? And if not, either ways, I'm curious what your thoughts on gold are, just in the current environment.
Yeah, so I did decide to focus fully on the new entry on the current 6 currency pairs. So I did a lot of research on that, and it was a success in the end. But gold I have not yet analyzed. Let me check it out. So on the 1 hour, I'm seeing this nice push to a downside, some definitely strong selling pressure, but then buying pressure also kicked back in right here. So yeah, for now, I would sit on the sidelines for gold, to be honest with you. But also right here, I can see some nice bullish pressure legs, which can definitely be exploited. So I think gold is a good candidate for somewhere in the future for me to research it. But if I had to have a bias right now, I would say it's going to range around, because I'm seeing selling pressure and then I'm seeing buying pressure as well. So I'd expect something like this inside of this area.
Okay, fair enough. Yeah, it definitely has had a big change in pace, at the very least from the turn of the year, with that dollar kind of strengthening a little bit. Miko, what do you think on gold? Are you does it look strong, weak? What are you thinking?
Yeah, I'm still overall a gold bull, but it's just not really at good prices for me to position myself long at the moment. From a higher time frame perspective, we're still trading this big level resistance here on the weekly chart. So I'm kind of trying to stay away from buying here, unless if you break through, things get interesting. But at the moment, we're kind of struggling, especially for the previous weekly candle. So we're kind of struggling at these prices. So if anything, I would only be looking to short. I'd only be looking to short gold for the time being. And I wouldn't look to try and push it too far, because as I said, I'm still looking for gold to eventually take out that wick high at 2150. So if anything, there might be some nice sell opportunities, since we are still in that big level, rejecting it. There might be a nice short for maybe next week, potentially, if we can creep up a little bit higher. We'll see what NFP does on Friday, but I'll probably be looking at something like that from gold. That's probably the best I can see for now, but I'm kind of still looking to buy, but I don't really have anything set up for that bias just yet.
Yep, fair enough. And I'll just show my chart again for those of you guys who missed it earlier in the stream. From a price action standpoint, gold looks really struggle central for me. We've really broken through a couple key levels of support. I actually tried to buy it over here, and it did not work out. Well, actually, sorry, I bought it like over here, thinking that, okay, this level of support held very nicely. We could see this thing overall kind of resume its trend. Maybe it's just taking a pause. And then sure enough, it dropped through that level. And now that very, kind of momentum has continued to the downside. I am still, same with you, Miko, long term, I'm still a bull, but I'd like to see price action actually give me, the green light to take trades. I'd like to see, breakouts, retests, and levels of resistance start to become support. I'd like to see momentum kind of flipping towards the bulls. One of the big reasons, again, just quick nod to the fundamentals, is that rates are still expected to come down this year. Inflation is cooling still overall. And unless if that's kind of what the base case for what's going to happen in markets, that environment should be, historically speaking, a very positive one for gold. It's why we had a nice run up prior to the end of the year. And I think that trend could kind of find its way back into the narrative again. So I am looking on the technical side for the actual signals to show up for me to start trading that. But definitely an interesting one to watch close going into the first couple months of the year. Also, we spoke last time you guys were on about seasonality a little bit, and I think that seasonality is one of those that kind of crosses between it. It's like a bridge between technicals and fundamentals because it is observed through purely technicals, but fundamentalists love to talk about it too. Anyways, seasonality for gold in the last 10 years has been very positive in the month of January and in February. So it'll be interesting to see if we get that this year. If now, of course, this is not a guarantee by any means. Nothing in markets is, but understanding that, okay, historically speaking, they are more in the last 10 years, observably more bullish in the first couple months, is worth considering in analysis. So I think we'll have to keep an eye on that as we trade through January, February. So like I said, I'm looking for breakouts if we can get them first couple weeks. I guess next question here for you guys is the indices are selling off. Marco, what are your thoughts on any of them? I think we spoke last time and you mentioned if you were going to look at one closely, you'd probably talk about the S&P, right?
Yep. So let me check out the S&P. Oop. I think this is the wrong chart. This one should be better. Okay, so on the 1 hour, what can I see here? Yeah, in a downtrend, in a short-term downtrend on the 1 hour chart, definitely some large bearish legs and a little bit, so signs of some bullish pressure in this candle, but overall it's just correctively going down. So you're out of your position, correct, Nick?
I am. Yep.
So definitely I'm seeing a shift in momentum on this 1 hour. On the daily, a large correction on the daily as well. If I just measure this momentum and compare it to the legs going up, so definitely some large move, definitely a large move, and I would not be surprised if this goes down a bit more. Now it kind of also broke this major low as well, or is close to breaking it. Once it breaks that structure, I do expect this to be a larger correction, and the momentum is definitely for it to go down a bit more.
Yeah, I think this is where lower time frames can really be useful too, especially because you're seeing that momentum really pick up on the lower time frames. But if you were to only look at the daily chart, it can be a little bit deceiving because it's like, oh, it's not too big of a sell-off, but you can really see it happening in the lower time frames. And as you mentioned, if this key level breaks, I think at 4,700, that could be a cue that the S&P has more room to pull back and maybe give back or kind of take a breather from all those gains that it made end of 2023. Miko, what do you think? Any of the indices, I guess S&P, NAS, or Dow? What do you, any thoughts on those?
Yeah, I mean, from S&P, I still do like this to the upside because US 30, US 100, we did create higher highs with those. So I would expect S&P to follow suit and do that as well. So the down move we're seeing now, I'm looking purely as retracement. It is looking a little bit sharp. We're seeing some nice bearish momentum, but I would expect this to eventually exhaust and find its next leg to the upside to go and follow what US 30 and US 100 did. So for this one, I mean, some nice areas to potentially pick up some longs down here around 4,600. There is a big level of support at this area, which I'm not too sure if it will hold, but if that does break, I think it would just give a bigger retracement and better buying opportunities, in my opinion. US 30, US 100, I kind of don't have too much to say about at the moment because they've just pinched the highs. So I'm kind of less interested in looking to analyze them too much because when we create highs, we potentially see bigger pullbacks, or maybe price wants to push high as well, and we don't really have a lot of structure to trade. But S&P does look interesting to me for some more upside. So I think we could be seeing another leg higher, but maybe some retracement first.
I generally agree with that too. And one to point out of the three is the NASDAQ has really just gotten destroyed. I made a point earlier in the show that the Dow, which is comprised mostly of more of the safe, super giant companies that everyone knows, like Walmart and, Coca-Cola and Apple. It's like the super safe one of the three in terms of composition compared to the NASDAQ, which is much more tech stocks and growth focused stocks. You can see a huge divergence in the two, and actually matters to currency traders as well, because what this is telling us is that a massive sell-off, well, not massive, but a comparatively big 4% down on the NASDAQ compared to like a 1% correction on what we're seeing in the Dow at its peak sell-off. What that tells you is that traders, investors seem a little bit more attracted right now to safe haven areas. And perhaps that has something to say about, why the dollar is making a little bit of a move higher, and, definitely can carry over into the currency market. That's why, I made the point early in the show today that I think, if you're really, a trader, even if you don't trade these things, and I appreciate this is why I ask you guys to do these things too. It's important for traders to see that even if you don't trade a particular market, understanding generally what it tells you about other areas of the market can be very, very useful in getting a full look when you're doing your analysis, even if you don't actually execute trades on the assets that we may talk about. So
don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.